In simple terms, a bank overdraft is when the business makes payments from their business's current account which exceeds the cash they actually have available. They are a very common way for small and medium-sized business enterprises to source finance, especially for businesses that have finance requirements which fluctuate on a regular basis. Typically, the bank would offer an overdraft to a business on either a rolling basis with no set end date, with interest added at regular intervals, or over a fixed period of time. In addition to this, overdrafts can be pre-agreed between the bank and the business in the form of an authorised overdraft, which typically has lower interest rates in comparison to an unauthorised overdraft, which will typically see the business charged additional fees on top of the interest. Therefore, if the business can foresee the requirement for additional funding, it is better to arrange an authorised overdraft to keep the additional cost down. It is classed as a short-term external method of finance, as it should in theory be paid off soon after the business receives it. This is due to the varying amounts of interest which can be added daily and ultimately is repayable on demand by the bank. The actual amount of cash the business goes into the overdraft will vary over time depending on the cash flows of the business itself, and if the size of the overdraft increases to a significant amount, the bank may require the business to secure the overdraft against the assets of the business. Importantly, if it becomes a common occurrence for a business to be in an overdraft, it may want to consider alternative options such as a bank loan to reduce the additional amounts of interest and one-off charges incurred with an overdraft. Some of the key advantages of a bank overdraft include: the business only pays interest when it's overdrawn, and typically it is quick and easy to arrange and funds are available immediately after it's been set up. Unlike other sources of finance, there is typically no charge for clearing the balance earlier than expected. However, it is important to understand the disadvantages associated with bank overdraft. Firstly, on the typical overdraft, interest rates vary, therefore it is difficult for the business to accurately predict the cost of borrowing. And not repaying the overdraft can have serious consequences for the business, as interest will keep adding to the total amount repayable. Also, the business may lose assets in the process, whilst directors of the company can also be personally liable dependent on the overdraft agreement.